I want to tell you about a 2-acre parcel in the Arizona desert. Gentle slope, distant mountain views, scenic location. I paid $2,000 for it. I listed it for $6,000. It sat for 4 months without a single serious offer. I eventually sold it for $1,500. A $500 loss on a deal that looked perfect on paper. That loss taught me more than any of my profitable deals ever did. Today, I'm going to walk you through 5 raw land deals that went wrong. Real stories, real losses, real mistakes, and more importantly, the exact lesson each one taught me that I now apply to every deal I run. Because in land investing, the losses aren't failures. They're the most expensive education you'll ever get, and I'm going to give you those lessons for free. New here? Subscribe. We cover raw land deals and tax delinquent opportunities every week. It's free. Deal number 1, the desert parcel. That nobody wanted, the Arizona deal I just described. Here's what went wrong and why it matters for every deal you'll ever run. I researched comparable listings on LandWatch and Zillow. I found similar parcels priced at $5,000 to $7,000. I assumed that meant buyers were paying that range. I was wrong. Those listings were stale. Some had been sitting for 8, 10, 12 months. Nobody was buying them. I priced based on what sellers were asking, not what buyers were paying. The real sold data, which I didn't pull, showed actual transactions in that area closing between $1,200 and $2,000. I had bought at market. I had priced above market. And the buyer pool in that specific county was made up of local ranchers and residents who knew exactly what land traded for. They weren't going to pay $6,000 for something worth $2,000. I eventually dropped the price to $1,500 just to move it. $500 loss. 4 months of holding. Lesson learned. The fix I now use on every deal. I only price based on sold comparables, not active listings. Active listings tell me what sellers hope to get. Sold listings tell me what buyers actually paid. That single change transformed my accuracy on resale pricing. Deal number 2, the landlocked parcel I didn't verify. This one still stings. A 5-acre wooded lot in rural Tennessee. Beautiful satellite imagery, dense tree cover, natural creek running through it. Back taxes owed $1,200. I was excited. I bought it without making a phone call. 3 days after the deed recorded, I started trying to get driving directions to the property. There were none. The parcel was completely surrounded by private land. No public road within a mile. No recorded easement. No right-of-way. Nothing. I had bought a landlocked parcel. Try selling landlocked land. Go ahead. I'll wait. I spent 6 months trying to negotiate an access easement with the neighboring landowner. He wasn't interested. I eventually sold it to the neighbor for $800, the only person who could legally benefit from owning it. I had paid $1,200. $400 loss. 6 months of frustration. The fix? Road access is now the first thing I check on every parcel before anything else. Not the price, not the location, not the aesthetics. Road access, county GIS map, confirmed before I spend a single dollar. If I can't confirm legal road access from a public road, I move on immediately. Deal number 3, the wetlands problem. Nobody warned me about. This one came from a trusted source, which made it worse. A 1.2-acre lot near a recreational lake in Florida. A real estate agent I had worked with before told me it was a winner. She had looked at the environmental study and called it solid. I closed on it based largely on her assessment. 2 weeks later, she called me back. She had misread the study. The parcel was 87% wetland, meaning nearly the entire lot was protected land that could not be developed cleared, or altered in any way. The small developable portion was too small to be useful to almost any buyer. I held that parcel for 14 months before finding someone willing to take it. I sold for significantly less than I paid, after paying more than a year of property taxes. The lesson: environmental assessments are your responsibility, not your agent's, not the county's, yours. Before I close on any parcel near water, near low-lying areas, or in states with strong wetland protections, I run a FEMA flood zone check and a basic wetlands mapping tool. Both are free online. Both take less than 10 minutes. 10 minutes of environmental research can save you 14 months of a deadweight investment. Deal number 4, the overpriced remote parcel. This mistake was more subtle and harder to see coming. I bought 2 similar parcels at the same time, same state, same size, similar terrain, similar price. One sold in 3 weeks. The other sat for 6 months and eventually sold at a loss. What was the difference? The successful parcel was 10 minutes from a small town, county-maintained road, power lines visible nearby, gas station, and grocery store within a reasonable drive. The failed parcel was 45 minutes from the nearest anything, rough dirt roads, no utilities within miles, challenging access in wet weather. I had listed both at the same price with nearly identical descriptions. I didn't understand that for most buyers, remote means adventure up to a point. After that point, remote means inconvenient, and inconvenient doesn't sell. The lesson: location. Within the state matters as much as the state itself. A parcel 20 minutes from a small town and a parcel 60 minutes from that same town are not the same investment, even if they look identical on a map. I now score every parcel on 3 distance factors: distance to the nearest paved road, distance to the nearest town with basic services, distance to the nearest hospital or emergency services. Buyers think about these things even when they don't say it. The ones who don't think about it before buying wish they had after. Deal number 5, the code violation I almost missed. This is the closest call on this list. A 3-acre parcel in rural Georgia. Clean title history, good road access, reasonable price. I was about to close. One phone call saved me, on a habit I developed after the Tennessee landlocked deal. I called the county recorder's office to ask one simple question: are there any recorded liens, violations, or encumbrances attached to parcel number besides the tax lien? There was a code enforcement violation from 4 years earlier. An unpermitted structure had been placed on the parcel and never removed. The violation carried a fine of $9,000 that would transfer to the new owner at closing. The purchase price was $4,000. I would have bought a $4,000 parcel with a $9,000 liability attached to it. I walked away. The lesson? Always call the county recorder's office before you close. Ask specifically about code enforcement violations and municipal liens. This is a 5-minute call. It is the cheapest insurance you will ever buy. Over 60% of new land investors report significant financial setbacks from skipping this step. Don't be one of them. The pattern across all 5 deals. Looking back at these 5 deals, the losses weren't random. They all came from the same place. Skipping a step. Deal 1, I skipped. Verifying sold data versus active listings. Deal 2, I skipped. Confirming road access before buying. Deal 3, I delegated environmental research instead of owning it myself. Deal 4, I skipped scoring the parcel on distance factors that buyers care about. Deal 5, almost skipped the county recorder call. Every loss on this list was preventable. every single one. The due diligence checklist I now run before every single deal. 1. Road access confirmed on county GIS map. 2. Sold comparables, not active listings, pulled from LandWatch. 3. FEMA flood zone and wetlands mapping. Check completed. 4. Distance scored, nearest paved road, nearest town, nearest services. FEVA, county recorder called, liens, violations, encumbrances verified. 6. Title search ordered before closing. 6 steps, 90 minutes of work. 90 minutes that have protected every deal I've run since these losses. What these losses actually cost me. The Arizona parcel, $500 loss. The Tennessee, landlocked parcel, $400 loss. The Florida wetlands deal, several $100s plus 14 months of time, the remote. Georgia parcel, loss on sale after 6 months holding, the Georgia code violation. 0 loss, I walked away in time. Total financial damage from the 4 deals that closed, under $3,000. That's a cheap education. Most investors pay that for a course that teaches the same lessons. Mine came from experience, and now yours doesn't have to. If this is the kind of content you want more of, the subscribe button is right there. And it actually helps the algorithm decide whether to show this to more people who need to hear it. Next video, he turned $3,000 of raw land into $180,000. His exact strategy, every step. You don't want to miss that one.